Good morning. This is Team Alpha Bravo. My name's Iman. This is Tom. This is Bruce. This is James, and this is the lovely Maham. And today we will be going through our section of our chosen section of the assignment. And the title of our brief is: For a firm or industry of your choice, undertake a business environment analysis indicating the likely major issues to be faced by the firm or industry in the upcoming 3 years. Now, we will be going through our ideas and our conceptual thoughts in different stages. First, we'll start off with Tom, and then we'll go through the others. Thank you very much. Tom, over to you, my friend.
Thanks, Iman.
Thank you, Tom.
Undoubtedly, one of the main issues likely to be faced by the banking industry will be the threat of a double-dip recession. According to recent reports by well-respected forecasters, we've already entered the double-dip recession, and the economy is unlikely to pick up until 2013. The fear of another recession is also affecting businesses, with 50% of finance directors expecting another recession, and companies believing there's a 75% chance of another recession. Especially in Wales and the Midlands, these are where they're feeling the most nervous. However, other economists disagree with this claim. Although they admit there is still a high chance of going into the double dip after the contraction of 0.2% in the last 3 months of 2011, and the GDP is unlikely to achieve its pre-recession levels until 2016. The Bank of England claims their injection of £200 billion into the UK economy through quantitative easing helped the economy avoid a double-dip recession at the end of 2011. The Bank of England's monetary policy has also unanimously voted to hold interest rates and continue with quantitative easing to combat the opportunity of another recession. And the sharpest decline in credit availability since the third quarter of 2008 shows how bank credit and corporate bond markets have become more difficult. And I'm going to hand over to Bruce.
Thank you, Tom.
Hi, are we talking about the effects the Eurozone bailouts will have on the UK's banking sector? After almost recovering from the 2008 financial crisis, the UK has seen a massive setback due to the financial instability of some countries within the EU. These are generally known as the pigs, which are Portugal, Ireland, Italy, Greece and Spain. The UK holds a 4.5% share in an organisation called the IMF, which is the International Monetary Fund, and this has overall sent out 30 billion euros to Greece, and therefore, because of the shareholder, the UK share, we've spent over £1 billion on to Greece, and then also we've spent £3 billion to Portugal. Although the UK might be criticised for not giving any more, but there's no proposition that states that they should have to participate beyond that of the IMF. The Financial Policy Committee, or the FPC, has encouraged the UK banks to build up their capital levels when the situation allows them to, due to the risk of the economic financial situation. And this is because this will keep the banks at a stronger position if the problems that other Eurozone countries have been facing will be found in a stronger position. The financial crisis that the pigs are facing currently could easily spill over to the UK banks within the next few years, and this could cause the trust that bonds the UK banks together to be lost, resulting in a decrease of the level of interbank trading, which in the end has a worst case scenario of some major banks going bust. And this could have a knock-on effect on the economy. And I will hand over to my colleague, Maham.
Thank you. Okay, I'm going to talk about banks' future in terms of the profits they make. And first, I think it's necessary to know how banks make profits. Banks, one of the main ways that banks make profits is that they lend money to as loans to other people and get interest, a lot of interest on that, and they pay just a little bit interest to depositors. So there is a massive gap and the bank keeps the difference. That's the main way, but there are some other ways like selling insurance. The current issue that banks are facing is, next slide please. One of the main problems that banks are now facing is liquidity trap, which means like despite their interest rates on loans are very low, like in 2010, 11 and 12 it's almost 0%, but people still don't want to get loans because they prefer hold cash instead of buying properties and get loans for that. And so one of the main way for banks to make profit is depositors' money which they don't have at the moment. And for future, next slide please, there are tight regulations limits that banks, because of the bank's risky investments they made in 2008 for financial crisis, regulators are tightening their regulations so the banks will act safer, and they can't. So there is a massive decrease in their profits. And next slide, please. And as American investor James Rogers says, there is a 100% chance of another crisis, which is bigger than 2008, and like Euro crisis, which Euro has at the moment.
Okay, well, I'm going to talk about the social cultural issues, which is the fact banks have a poor reputation in the eyes of the public, which is obviously their customer. This seems to happen because they're blamed for the financial crisis, which has affected most people in one way or another. And so it's become almost a hatred rather than just a bad reputation. It's obviously not something our business would like, and it's probably going to last for at least another 3 years. Because of this poor reputation, banks will have a much harder time attracting customers and thus money, obviously. This will cost them in a monetary nature because to rehabilitate their brands, they're going to have to spend a lot of money and time doing marketing and advertising. And also, it takes a long time to bring back the trust of the public. Some of the reactions have thought that smaller banks were seen more trustworthy than the big multinational ones, although there's not a lot of evidence of this. And also because all the banks seem to be not trusted by the public, and the public still has to put their money somewhere, it might not have a massive effect on them because everyone's in the same position. Here's the references and the next one. Thank you very much for your time.